There is one setup that I use every single day. It's incredibly easy, very reliable, and the reason why I'm able to make consistent profits in the market. The reason why I say it's easy is because all it requires is understanding one simple trading approach. The reason why most traders fail is the lack of simplicity in not keeping things simple enough. The harder we try to make trading work using complicated strategies and fancy indicators, the worse we get. So in today's video, I'm going to give you the entire strategy framework, and then I'm going to show you exactly how to execute this strategy through back-tested examples to help you gain confidence in the markets. So with that being said, let's get right into the video. Okay, so in today's video, we're going to talk about the first candle rule and why the first candle rule is so important when it comes to trading. And some things we're going to talk about regarding the first candle rule is the opening candle, why that opening candle is so important and tells you everything that you need to know. What time frames should we be using regarding the first candle rule? Should we be using the 1, 5, or 15-minute time frame? And in this case, how we can actually use all the time frames in combination with one another, the different type of confluences slash entry confirmations on the lower time frames, along with our entries, stops, targets, and of course, we're going to be going over examples to really solidify this concept and exactly how to execute this strategy in real time. So first, let's talk about the opening candle. So the first 15-minute candle is the most important candle when it comes to trading. This candle tells you everything that you need to know about the potential trend of the market. And this is going to be the first candle of New York session. So at 9:30 a.m. Eastern Standard Time, you can wait for the first 15 minutes to play out and you can mark out the high and low of the candle. The reason why it's so important to wait for the first 15 minutes of market open is because it reduces the noise. A lot of times, right off of market open, you shouldn't be trading within the first 15 to 30 minutes because there's a lot of volatility right off the bat. If you don't have an opening play, a lot of times you can get faked out and you can lose a lot of money trying to capture that morning volatility. So if you wait for that first 15-minute candle to develop, what it's not only going to do is it's going to reduce the noise, it's going to reduce a lot of fake outs as well, and you're going to have a lot more clear of a picture after that first 15-minute candle develops. And once you wait for that first 15-minute candle to develop, it's going to give you a lot more clear picture of exactly what the market wants to do, if it wants to trend for the day, or if the first 15 to 30 minutes is choppy, then we're not going to be looking for any opportunities if the market is consolidating. So with this being said, this is step number one. It's fairly simple, marking out the high and low of the first 15-minute candle. Now let's go on to the second step. So what I have here is time frames. And the question I always get asked is, what time frame should I be on? The 1, 5, or 15-minute time frame. And in this case, what we can do is actually combine all time frames together and use every single time frame in combination with one another to give us the highest probability trade setup. So first things first, what we want to do is wait for the first 15 minutes to play out. So we wait for the first 15 minutes to play out, and what we want to do is mark out the high and low of the first 15-minute candle. Then what we can do is go on to the 5-minute time frame, and what we want to do now is wait for 5-minute candle closure above the 15-minute opening range high, or a 5-minute candle closure below the 15-minute opening range high. And it's very important to understand that we have to wait for the candle closure. The candle closure is what's important here. If it wicks above but does not close above your 15-minute opening range, then the setup is invalidated and we can expect it to stay within the 15-minute opening range. So the 15-minute high and low is very important. So let's just mark out the 15-minute high. We can also mark out the 15-minute low. Let's say, for example, price closes above your 15-minute opening range. This is very bullish. As you can see, we have a 5-minute candle closure above your 15-minute opening range. What can we expect? We can expect now the markets, all dips, to get bought up for a continued push towards the upside. If we close inside of the range and we actually have this huge wick, what does this indicate? This indicates that sellers are stepping in, and most likely we're just going to reverse back inside of the range on the 15-minute. Similar to the downside, if we're able to close underneath its 15-minute opening range, this signifies that we can potentially have more continuation lower towards the lows. If we close inside of the range and we wick underneath and we close back inside its 15-minute range, then as you can see right here, this just signifies that most likely we're going to be chopping around just because we're inside of its 5-minute range. So as you can see right here, candle closure above your 15-minute range or below your 15-minute range is going to be very important. If we have wicks, that indicates a potential reversal in the market. And then finally, what we now want to do is after we get your 5-minute candle closure above or below your 15-minute range, then we can go on to the 1-minute time frame and look for entry confirmations. So once we get that confirmation candle, which is going to be that candle closure above or below your 15-minute opening range, now we can go into the lower time frames, the 1 minute, to look for potential trading opportunities. And what we'll be looking for in this case is the break below and hold underneath your 15-minute opening range for continuation towards the downside. Or if we were bullish and we had a 5-minute candle closure above your 15-minute range, then we'd be looking for continuation towards the upside. And understanding the reaction that we have off of your first 15-minute candle high and low is going to be important, because potentially if the market doesn't want to show weakness underneath your 15-minute range high and low, we could be looking for this potential reversal trade if the sellers don't step in for a reversal back towards the upside. And similar thing, if there's no continuation above your 15-minute opening range high, we can be looking for the retest back below your 15-minute opening range high for this continued push back down towards the opening candle range low. And you can see how powerful this strategy is using the 15-minute time frame high and low in combination with the 5-minute candle closure above your high or low, and then using the 1-minute time frame for our entry confirmations. So with this being said, I'm going to go over the past few weeks of price action, and we're going to backtest this to see exactly how to execute this strategy in real time. So right here, you can see we're on the QQQ or the NASDAQ. And what I'm going to be doing is going through a few weeks worth of price action to see exactly how to execute this strategy in real time. So as you can see on the left-hand side, what I'm going to have is the 15-minute, and I'm also going to be using the 5-minute chart. This is going to be our higher time frames. And then on the right-hand side, it's going to be the 1-minute time frame. This is where we're going to be looking to manage our positions, our entries, our exits, and our stops. So first things first, what we can do is mark out your opening range high on the 15-minute time frame, and you can also mark out your opening candle range low. Now you can go on to the 5-minute chart, and what we're going to be doing is waiting for a 5-minute candle closure above or below your 15-minute opening range. Now let's play out the tape. So as you can see right here, we're finally getting that 5-minute candle closure underneath your 15-minute opening range. So what we could be doing now is looking for opportunities for potential continued push towards the downside. Just based off this price action here, you can see we have our range established. We end up having some buyers that stepped in off our low. We had a nice pop higher, but now you can see, right, sellers are stepping in, creating lower highs. Now what we like to see is any sort of weak price action off of our 15-minute opening range low for a continued push towards the downside. And as you can see right there, we ended up having a weak reaction, an immediate retest for a potential continued push towards the downside. And as you'll see with this strategy, sometimes you're not going to always get the perfect entry. Sometimes you're going to get an immediate retest. Sometimes you're going to get a retest with a lot of displacement, right? The entries is not always going to be perfect, but what really matters is the higher timeframes in this case, using that 15-minute opening range and then waiting for that 5-minute candle closure above or below the range. So in this case, now what we can do is look to go short with a stop just a break above your pivot high. And now what we can do is look to target a 1 to 2 towards the downside. We're just going to make it nice and easy. We're going to use a fixed risk to reward ratio in this case, which is a 1 to 2. In your case, you could be looking for a 1 to 2 and external levels. And now we can play out the tape. And you can see right there for the QQQ, we end up having a nice push towards the downside. And you can see on the right-hand side here as well, if I zoom this in just a little bit, it was a super nice break of your opening range on the 15-minute time frame. Once we had that 5-minute candle closure underneath, we end up having nice continuation towards the downside with the immediate retest, as you can see right here. This is an immediate retest of your 15-minute opening range, and we end up having this nice push towards the downside. Now let's go on to the next day that we have here. So as you can see, we're on the next day here, and we're going to do the exact same thing. frame. Mark out our 15-minute opening range high, and now we're gonna mark out our 15-minute opening range low. Now we can go into the 5-minute time frame, and what we want to do, as I mentioned, is wait for a 5-minute candle closure above your 15-minute opening range or a 5-minute candle closure below your 15-minute opening range. Now let's play out the tape. So you can see right here on the QQQ, we're breaking above your 5-minute opening range, as you can see right here. Now what we'll be looking for is the reaction that we have off of your 15-minute opening range. So we already had a nice big push towards the upside. We're breaking above your 15-minute opening range. We have a clear trend right off the start of market open. Now what we like to see is really this 15-minute opening range hold, right? We have levels all the way down in towards your 438.80, but this would be a very steep pullback and something that you wouldn't be too interested in unless you had some other higher time frame confluence. So this is really the area that we're going to be looking for, your first pullback for this potential continued pushback towards the upside. So as you can see right there on the QQQ, we end up having a push underneath your 15-minute opening range. But so far you can see we're reclaiming the key level. You can see the 5-minute is shaping up nicely here as well. What we're going to be looking for is an entry with a stop just a break below this opening candle. And now what we can be looking for, as I mentioned, is a fixed risk reward ratio. We could be looking for high of day and above, being that 1-to-2 risk reward ratio. Now let's play out the tape. And you can see right there for the QQQ, we end up having this nice continue push up in towards your high of day and above. And you can see exactly how this 5-minute formed here as well. 5-minute formed fairly nicely. We end up having a bunch of these lower wicks, but you can see never close below your 5-minute opening range. And on the 1-minute time frame, we had a fairly tight stop. We could have even had a wider stop down in towards that 439.99 for this push higher. But really all we needed was a candle close below your previous pivot point here for this continued push back towards the upside. Now let's go on to the next day. All right, we're on the next day here on the QQQ, and what we're going to do is mark out our opening candle range high. We're also going to mark out our opening candle range low on the 15-minute time frame. Now we can go into the 5-minute chart. What we want to do now is wait for a 5-minute candle closure above or a 5-minute candle closure below. Now let's play out the tape. As you can see right here, for the first hour of market open, the reason why this strategy is so great is because you're waiting minimum for the first 15 to 30 minutes to play out. And if the first 15 to 30 minutes is choppy, then you're not going to be looking to take any trades. So in this case, we haven't had a 5-minute candle closure above or below your 15-minute opening range. We had a couple touches in these upper wicks, but you can see price just hasn't closed above. So this is a good indication that you don't want to be looking for any sort of trading opportunities just because we're choppy. So my rule of thumb is that if price is choppy within the first hour, most likely you don't want to be looking for any sort of trading opportunities during this day. You could still be waiting for the 5-minute candle closure above the high, but there's a good chance we probably won't have continuation and potentially we could reject and just come back inside of the range. But let's keep playing out the tape to see exactly what we're going to be looking for. So as you can see right here, we're finally getting that 5-minute candle closure above your 15-minute opening range high. Now let's see if there's any sort of strong price action around this general area for this potential continue push back towards the upside. So we can mark out this level and we can play out the tape. So you can see currently right here for the QQQ, we had a 5-minute candle closure above your 15-minute opening range high. You can see all these wicks right here. There's not too much displacement, but let's say, for example, you want to go for a long position right here off of your 5-minute opening range with a stop in this case, just a break below this opening candle, and you're looking to target a 1-to-2 and above. Let's play out this tape. So what does this look like here on the 5-minute time frame? We had a 5-minute candle closure above the range, but we didn't have too much displacement. You can see these upper wicks are being put in. We're actually rejecting off your 462.50 now. You can see it's a lot more chop here. So what you could potentially be looking for is actually a reversal setup back towards the downside, towards these lows, just based off of the 1-minute time frame, breaking structure along with this 5-minute time frame here as well. So let's say, for example, we wanted to actually inverse this position, looking for a move lower. In this case, where would our stop be? Our stop would be at the highs, being that basically a 15-minute opening range high, and our targets would be all the way back down and towards low of day. This would be the only other potential trade scenario that you would be looking for, since now you can see we're breaking back underneath your 15-minute opening range. Let's see if this trade plays out. You can see right there, price ended up gravitating all the way back down towards low of day, which was a super key area for price. As I mentioned, the key areas is going to be your 15-minute opening range high, along with your 15-minute opening range low. And this is just trading inside of a range. If we fail to break above your opening candle range high, what we could be looking for is a potential trade back down and towards your opening candle range low. So with this being said, let's go on to the next example that we do have. So as you can see, we're on the next day here on the Qs. What we're going to do, mark out our opening candle range high. We're also going to mark out our opening candle range low. And now we can go into the 5-minute time frame. Now we're waiting for a candle close above or a candle close below your 15-minute opening range. So you can see right there, we have a 5-minute candle close above your 15-minute opening range. What we want to see now, right, continuation above your 15-minute opening range for this push back towards the upside. We actually do have this order block here as well, so we can use this in combination with your 15-minute opening range. Let's play out the tape. So far, you can see that Q's pushing towards the upside here. We have our 5-minute candle closure. We're also showing some nice price action here off this 1-minute order block here as well. So this is where we can go look long, stop, break below this order block. And in this case, we can look for a 1 to 2 back towards the upside. Now we can play out the tape. And you can see right there for the QQQ, we end up having a nice continued push towards upside, right? Capturing this trend higher using the 15-minute time frame in combination with your 5-minute time frame, in combination with your 1-minute time frame here as well. We're able to get fairly precise entries off your 15-minute opening range, which happen to coincide with a 1-minute order block. So as I mentioned, more confluences the better. We also waited for strong price action as well, which was able to trade this all the way back up and towards that 460. So let's go on to the next example that we have. So as you can see, we're on the next day here on the QQQ. And as always, mark out our 15-minute opening range high, our 15-minute opening range low. Now we can go on to the 5-minute time frame. As always, waiting for that close above or the close below here on the 5-minute time frame. Now let's play out the tape. So far, unable to close below your 5-minute range here. So as you can see, we actually end up pushing back towards the upside here, having that 5-minute candle close above your 15-minute opening range high. So we can mark out this general area and use this as a potential retest for this continued push back towards the upside. Now let's see if there's any sort of reaction around this general area. You can see right there, super strong reaction here on the QQQ right off of your 15-minute opening range. Perfect retest here as well. We can get in on this confirmation candle with a stop just a break below this candle low. In this case, we can be looking to target a 1 to 2 back towards the upside. Now let's play out the tape. And you can see right there, price ended up stopping me out. For me, this was a super solid trade setup. We had that 1-minute candle confirmation. We had that 5-minute candle closure. We end up having a super nice reaction, looking for that continuation back higher. And you can see what happens. If we're unable to hold our 15-minute opening range high, what's most likely going to happen? It's actually going to gravitate back down towards your 15-minute opening range low. So if you're able to be quick enough in this case, once you stop out, potentially you could be looking for the short back towards the downside, towards the low of the range in this case. This is a scenario that you could be looking for. You have to be very quick and be open to trading both sides. And that's what personally makes this strategy so great, is that you can trade both sides. And as you can see, once you stop out, you can see price ends up having an immediate retest. You can be looking for an inverse for a potential move down towards your opening candle range low. With this being said, let's go into the next day that we have. So as you can see, we're on the next day here on the QQQ. And as always, we're going to mark out our opening candle range high. We're also going to mark out our opening candle range low. And now we're going to head on to the 5-minute time frame. So what we're going to do, wait for a break above or a break below your 15-minute opening range. As you can see right there, so far markets are actually rejecting off your 15-minute opening range. Potentially you could be looking for this inversion back towards the downside. In this case, for these inverse type of plays, what you want to be looking for is one of two things. You like to see an extreme push towards the upside. And as you can see, we're trying to hold it. Buyers are stepping in, but big candle close back inside of the range. You can see this also happens to be an upper wick here on the 5-minute time frame. So if you ever see this upper wick here on the 5-minute time frame, we're breaking back underneath this 474. You can see we're inversing a couple key levels here as well. Once we have that candle close underneath this key level at this 950, right, this can be a signal for a potential short position. So if we look for a short position now with a stop just to break above, we can look to target low of day for a potential scalp back towards the downside. Just based off of the fact that the 1 minute candle closing back underneath this 474, we have an upper wick here on the 5 minute time frame as well. Most likely we're going to come back inside of the range because of this upper wick that we have established. Now let's see if this trade ends up working out. And you can see we end up having this nice push towards the downside here on QQQ, right after inversing this key level, 5 minute candle close weak here as well. You can see price really stayed heavy. And you can see we end up having this nice push all the way back down towards low of day. And you can see once we break underneath low of day, now what is the next level that we have? The next level that we have in this case is going to be your 5 minute opening range low. And now you can see we have a 5 minute candle closure underneath your opening candle range low on the 15 minute time frame. Let's see if we want to have some more continuation potentially towards the downside off of your 471.50s. Let's see if there's any weak reaction here. Right, so far you can see sellers are stepping in. Once we have a candle close underneath, this is going to be our confirmation. So you can see in this case, we just kind of consolidated in this general area. So once we gravitated down towards the low of the range, there wasn't any sort of weak reaction underneath this 471.50s, right? The only trading opportunity in this case here was that potential reversal right off the bat. So this is a classic day of no continuation. And to decipher between a potential continuation versus a reversal setup is understanding, number one, the higher time frames. If you have other confluences as well that can indicate a potential weakness, like reading the tape, higher time frames, you could be looking for either the reversal setups or the continuation setups, depending on the type of market conditions that we do have. Let's go into the next day that we have here. So we're on the next day here on the Qs. As always, we're going to mark out our opening candle range high. We're also going to mark out our opening candle range low on the 15 minute. Let's go back onto the 5 minute time frame here. What we're going to now do is wait for a 5 minute candle close above or below your 15 minute opening range. As you can see right there, we have our 5 minute candle close above your 15 minute opening range. Now what we want to do is look for the reaction that we have off of your 471.40, basically your 5 minute range along with your 15 minute range. Nice push towards the upside here with displacement. So now this is going to be the exact area we're going to be looking for a continuation back towards the upside. So as you can see, pretty big wick right back down in towards your 5 minute opening range, along with your 15 minute opening range, also 10 o'clock here as well. So let's wait for buyers to step in. So you end up having this nice push right back towards the upside. This is where we can go look long. In this case, it wouldn't make too much sense if you're buying right at the candle high. But let's say, for example, right, we ended up getting in an entry as this candle was forming. You can see how the 5 minute candle here is forming as well with a stop just to break below your 471. Let's have a stop loss underneath here. And you can be looking to target a 1 to 2 back towards the upside. Now let's play out the tape. And you can see we end up having this nice push back higher on the QQQ. We end up having this perfect retest. You can see on the 5 minute, the structure was very nice, right? Break above your 15 minute opening range with displacement, retest. And then on the 1 minute time frame, we end up having this nice continued push back towards the upside. So let's go on to the next day that we have for the Qs. So as you can see right here, we're on the next day here on the Qs. We're going to mark out our opening candle range high, opening candle range low. Let's go into the 5 minute time frame, break below or break above here for the setup to be valid. Now let's play out the tape. So you can see right here, we had that 5 minute candle closure underneath your 15 minute opening range. We're going to be looking for shorts towards the downside, but you can see immediately, right, we end up having this big push higher right at 10 o'clock as well with news. So one thing I want to mention here as well is that if you're looking for trading opportunities, you want to be careful just around 10 o'clock because 10 o'clock is usually a key sign for a potential reversal or a continuation in the market. In this case, you can see that 10 o'clock is reversing price back towards the upside. What we could be looking for now is one of two things: the reversal back up in towards the highs, or you'd be waiting for price to break above your key high for this continued push back higher. So now let's play out the tape. So far you can see we're putting in an inverse head and shoulders here. Buyers are stepping in. We're closing back above this down close candle. You can see so far the 5 minute shaping up here as well. So let's say if we do want to take a long position, we can have our stop here at low of day, and we can look to target, right, a scalp just back up and towards highs. Let's see if this trade plays out. You can see we end up having this nice trade back up and towards your high of day. Now we're breaking back above your highs. A potential another trading opportunity would be a break above your 467 for this continued push higher. Let's see if there's any more continuation. So far, you can see we're having a little bit of reaction here. Let's see how this 5 minute candle closes. Buyers are stepping in, right? Nice kind of reaction above your previous candle. This is where we can go look long, stop a break below, and we can target a 1 to 2 back towards the highs. Let's play this out. And as you can see right there, we end up having this nice push back up and towards your 468. End up taking my hard stop that we did have. I personally would have had a mental stop. You can see the 5 minute wicks was holding above your 467.33. End up having this nice push back up and towards the highs, as you can see right here. So with this being said, let's go on to the next day that we have for the Qs. So for the QQQ, we should get the hang of it by now, marking out our 15-minute opening range high and low. Go into the 5 minute time frame. We're just going to be waiting for a candle close below or a candle close above on the 5 minute time frame. You can see so far we ended up getting a candle close below your 5 minute opening range, but you can see the next subsequent candle right here at 10 o'clock here as well, just right back inside of the range. So no real trading opportunities for continuation. As you can see right here, we're finally getting that candle close back above. So as you can see, when price is ranging like this, we go from the high and lows to the range. Once we break outside the range, it makes it a little bit more difficult to look for continuation just because we're ranging. There's a better chance that we end up having continuation lower. Whereas if we have a nice clear direction right off the bat, we're not ranging, we're not rejecting off the highs and lows, then I'd much rather be looking for continuation. But let's say, for example, we have this marked out. Let's wait for some strong price action to see potentially if we can gravitate higher. So as you can see right there, we're getting that candle close above at this 1034. This is where we can go look long with a stop just to break below. And in this case, what we can look to target is a 1 to 2 back towards the upside. Now let's play out the tape using your 5 minute candle, looking for that candle close above and to hold above your 438 for this push back towards the upside. Right there, as you can see, we end up pushing back towards the upside on the QQQ, and this is a good example of just letting the probabilities play out. So far on the QQQ, once we're able to close above here on the 5 minute time frame, we end up waiting for strong price action. So that's a key thing that we're always going to be looking for, preferably confirmation candles. The more confluences you have, the better. And what's so great about this strategy is that it is very low risk. If we end up having continuation, right, we can trail our position greater than a 1 to 2. If we stop out, we're going to have very minimal loss. And even then, we can look to potentially inverse our position for this continued push back towards the downside. So regardless of the outcome, we're going to have very minimal risk. And that's what's so great about this strategy. We're waiting for that 5 minute candle closure. And then we're even going into the 1 minute time frame to get those precise entries and to have very tight risk management. Let's go on to the last day that we have for us today. So as you can see, we're on the final day here for the QQQ. What we're going to do is mark out our opening candle range high. We're going to also mark out our opening candle range low, go on to the 5 minute time frame, break above or break below here on the 5 minute time frame. So far, you can see we're in range for the first 30 minutes. We're still looking for the close below or the close above here. So as you can see here, we're finally getting that candle close above your 15-minute opening range high. Now what we can do is mark out this level and we can be looking for continued push back towards the upside or a potential reversal back down and towards your opening candle range low. Now let's play out the tape. You can see so far we're coming back into this level. Let's see if there's any reaction here. You can see so far, this is a super solid setup here on the 5 minute time frame. Price has an upper wick, but you can see the lower wick that's being put in right off our 487.50. We have our candle close back above this key level here as well. This is our confirmation candle. We can have our stop just a break below, and we can look to target a 1 to 2 back towards the upside. Now let's play out the tape. So as you can see right there, price would have eventually gravitated towards the target. Me personally, I would not have been able to hold through all this chop. Most likely would have got stopped out. But you can see right here, once we broke above your 15-minute opening range, we end up holding this. We actually never broke underneath your 5 minute opening range all day. You can see all these lower wicks, right? The buyers are stepping in, right? And eventually we had that nice continued push towards the upside. So with this being said, as you can see right here, how powerful this strategy is. using the 15-minute time frame in combination with your 5-minute time frame and the 1-minute time frame to get those precise entries. One thing to note about this strategy is that all strategies work the best when there is volatility and liquidity in the markets. As you can see during this period, this strategy had a very high win rate, but in some periods, this strategy might have a lower win rate. You're gonna have to go back and back test that yourself, right? That is the main thing, is developing your own edge. I just laid out the entire framework for you to go and back test. You can now look for different entry confirmations. You can tweak this to your own liking, depending on if you want to trade continuations or if you like to trade reversals. It's all dependent on your personality. And that's something you're going to have to determine, because even as mechanical as this strategy is, there is different tweaks and there is different ways where it can be a little bit more discretionary. So with that being said, I hope you guys enjoyed the video. I appreciate if you guys drop me a like and sub. We're almost at 100K. I'm going to do a giveaway at 100,000 subscribers. So make sure you stay tuned for that. And with that being said, I'll see you guys next week for a brand new video. Peace.